Thanks for tuning into Finance Today. What a week. What a market. We might as well call it the Corona market at this point. Everything is red for the last couple weeks now. So, what is going on? You look at February 12th, we hit a very high point in the market. We were at 29,550 points. We're currently down 32%, sitting at 19,100 points as of March 20th. So what happened to our market to bring it to this point? In my opinion, there are three things. The first, this COVID-19 coronavirus began in Wuhan, China. Immediately, the Chinese dictatorship quarantined everything around the area. Now, what this meant for the United States is it began to become harder to import goods that are manufactured in China and precursor goods such as raw materials. Firms like Apple were having great difficulty getting their microchips and the processors from China. The US was worried that this would increase the price of consumer goods. So that was the initial fallout of the market. The second was an oil shock. When OPEC met earlier this month in March, Russia and Saudi Arabia, two of the world's most oil-producing countries, decided that they were going to boost production and decrease cost. What this meant for the United States is it's now basically unprofitable for any domestic firm to try to produce oil. The third and final reason for the market decline was a domestic quarantine of the public, which we are experiencing right now. So let's dig into that third point a little more, as it is the most destructive of all three. So what does quarantine mean for the United States market? Well, first, if everybody's staying inside quarantined, they're not spending any money on the majority of businesses. Number two, if businesses shut down, they're not bringing in any revenue and they still have their fixed costs. Fixed costs of a business could include its machinery, any overhead that it may have, the rent of its building. So when a firm has no revenue and the fixed costs are still in place, there's no possible way that they can service their debt. This is going to lead to massive bank defaults all across the economy. Now, to quote the CEO of the hedge fund Pershing Square Capital, Bill Ackman, he says, "Almost every big business can survive 1 month with no revenue. Almost none can survive a quarter without revenue." And he's talking about the big businesses. Small businesses, medium-sized businesses, they will all be out of business long before the large ones will. So when you look at the market and you're asking yourself, why is everything so red? Why are all these stocks so diminished in value? It's because people are literally betting on the bankruptcy of these firms. Whether it be Chapter 7 bankruptcy, which is the liquidation of all assets, or Chapter 11 bankruptcy, which is the reorganization of debt, people are betting that firms such as Boeing, which is down 72% from the $350 stock price, any of the firms in the travel industry, cruise lines, airlines, people are betting that those firms are not going to make it out alive. That's why you see all these firms bottoming out, and they'll continue to go to zero unless some federal help comes in. So what we're left with as a result of all of these shocks, we're left with a market that is extremely volatile. One day it's up 1,000 points, and then it's down a few thousand points over the next couple of days. So if you're not a seasoned veteran trader, I would park your money on the sidelines through all of this volatility. We should expect higher unemployment numbers to come and probably a wave of bankruptcy for many of these firms. Now, when things like a cure are realized or there's a solidified end date for this whole quarantine, then it might be time to consider getting into the market and start looking at some of these discounted stocks with a lot of cash on hand. But until that point, I would just keep your money and learn everything you can in anticipation for this new buying opportunity. So the other day I had a friend ask me, why would you teach anybody how to invest in this type of market? Don't you think you're going to give somebody a bad suggestion and they're going to lose money? And my answer to him was, I'm not going to give out any suggestions of how to play the market. But what I am going to do are make sure that people have all the skills and they're comfortable with investing so that when there is light at the end of the tunnel, and there will be light at the end of the tunnel, that you are prepared to invest in these stocks that are so heavily discounted right now. This could be the single most life-changing event to invest in firms of our lives. So I want you to be comfortable with investing and know the principles so that you can buy Apple at $200 per share, or you can buy all these heavily discounted shares and watch them appreciate in a grand way. This could pay off your college debt. This could be a down payment on a new house. This could be a new car. But you're never going to get there unless you start learning right now about how to invest in this new market. So with that, thanks for tuning in and stay safe out there, please. All right, so don't forget to like and subscribe to the channel. Throw any comments and questions down below. I will be answering questions. And turn on post notifications for our upcoming content. You won't want to miss it.